All right, good evening, everybody. It's Thursday, April 4th, 2024. It's a late one, so I'm going to knock through this pretty good, but I'm going to try to give you guys some good information. Uh, let's start with our automated trading systems. Our Dow has gone sideways frustratingly lately, but it's fine. That's a little back and forth today. More down than up, but eventually we're going to need to see some bullish trades kick in, some wins, and maybe a series of them like that would be nice for a bit. Sorry about that. Here's our Russell. It's finally perking up, which is exactly what we want to see with the other ones. So only one trade today, a little winner, but this recent run has been good, and it's given back a lot, and we're getting ready to potentially break out to new all-time highs. Oops, new green dots across the top there. And then the NASDAQ, which has just been dismal lately. But, what we want to see is this thing come all back just like this one did. And we could see it come back in a hurry if and when that ever happens. I've been expecting it for 2 weeks now, if not three. And we got one nice trade at the end of the day. But we have had a run of negative trades lately. But the math is solid, and I'm sticking to it. So that's the automated trading systems. Let's go to the indexes today. Had a brutal day. This is the S&P 500. I'm going to look at the indexes themselves. So that is a big bearish red candle. So it's time to give up the ship, right? I don't think so. For what it's worth, these are the new parabolic SAR dots that we put in as far as trade signals go. It's really a stop. These red ones are the weekly parabolic SAR, and we're going to watch that, and we're going to see how well the weekly holds up against them. Look at how it works back here in time, and we're going to watch and see. This is going to bounce from that zone. We're not quite oversold on the stochastic yet. I think that'll happen tomorrow, potentially. This is it's going to be. We're just going to watch that together and see how it goes. That's the S&P. Big down day today. The Dow, big down day today. The bullet or the SAR has flipped. It actually flipped officially today. That's what the little pink dot is there. But from a weekly standpoint, it's already flipped, and that's going to be an official flip tomorrow. So, here's the question, can we get that back up into this zone next week? Sure, we can. This is the type of thing, the kind of noise that'll get people to buy in to the downside, and there's still an awful lot of bullishness in this market. Now, do I think this is the beginning of a downtrend? Possibly. That's a whole nother animal. But it's just the beginning of that, and so today is on the Dow minus 530 points. Are we going to go into a weekend and reverse that? Likelihood is against it. We could reverse it and then puke more on Monday. We could puke into the weekend. I'm thinking it out loud. And then pull back up in the Monday and puke more. There's going to be more follow through to that big of a negative candle. But we've got support down here. We got all sorts of things. And the bullish percent indexes are still pretty strong. And we're going to keep an eye on that in the context of all of this. The bottom line is, I am not trading the Dow right now. And if I was, what would it be? it would be DUSL. That's the long Dow. There's a short one, DOG, DOG. If I was trading the Dow long, it would be this. And we just got a bullish or a SAR flip, which is this stop, and that is not a follow through candle. The candle tomorrow is going to be the kind of candle that would come back in and get everybody on the wrong side of that. This is the new level down here of a stop. So pulling back is an actual buy area for this, which gives us a chance to go short the Dow, and we literally could pull all the way into this zone through this area without stopping us out. You could actually even use that pivot to be a little bit more conservative, but this spot right here is fine. And I still think this thing's going to go long from here, but you also don't have anything long term. Your weekly, if we were going to look at the weekly, is all bearish for this position. So if you're doing it, it's totally against the long-term trend, and it's only because of a one-day hit, or maybe the potential for all these different the last 3 shots, which I think is reasonable. You could do it, but you have to make sure that your risk is mitigated, you know what it is, and don't put all your eggs in one basket if you're going to do it. So this is the inverse Dow play if you're going to make one. Make sure you use your stops. And that is not advice, that is education only. Alright, going to the Russell, we're going to look at the IWM. Big red candle, just like the other ones. Didn't even stop out today, although actually I think it did, because that went below yesterday's stop. So I'm out with a small gain or a small loss, whatever it was. And so be it. If this thing stopped me out from yesterday's bar, I don't want to be in anymore anyway, because the chances are we could roll over farther. I do want to show you AMD. So this is one that was actually a bearish trade. We got magenta dots, and I had a chance to get in when this thing pulled up in the hourly chart against the magenta dots over here, and I went bearish. And that is a big nice sell signal, and this is a bullish or a put position bearish play right now that I am 25% up already in. So you can play these things in both directions. Now I am not going to play this one for very long, because that is a nice well, we've actually had a lot of momentum to the upside. Now that we're unwinding to the downside, there's more potential for this thing to hit some support levels down here and go back higher again. And when that time comes, I'm going to be watching it really close on the hourly chart. So just giving you an example of, like, I saw the market flipping, had an opportunity to do some things, and that was one of them. Here's an actual bullish position that flipped today. We've had a pullback on the hourly chart. It was a great place to think about starting to buy. Now I'm risking this much, but I have bullish SAR dots on the daily and on the weekly lining up in the same area. And if you look at this potential for a triangle pattern that could break higher, I'm way going against the recent trend to the downside. If this is going to be a reversal play, you got to start somewhere, and it's going to go from here. And I just literally bought into a position where I've got the weekly and the daily in alignment that direction. If I'm wrong, so be it. And also the hourly chart over here, we've got action going to the upside. Now this is a big old relatively bearish candle for a shooting star pattern, but I've got all of this room before, and actually I can watch it on the daily or the hourly as well and see if this thing flips back to the downside, and I could even mitigate my risk that way. I'm not going to. I'm relatively willing to take that risk, but I'm just showing you some things like, we've got some opportunity potentially to go to the upside here. We got the 30 period moving averages in both directions going higher. So I had another bearish trade to be able to show, ARKK. So it's been going down. I bought an early position the other day, and I bought more when it pulled back higher and then pulled back against that on the hourly chart. And now we've solidly got what looks like to be a down play. Now the weekly's way up here for a stop. My daily's right here. I'm willing to take the daily. I won't go all the way to the weekly. There's no reason to. There's plenty of positions and plenty of ways to play this. Okay. I'm going to hurry up and wrap this up. So the Dow's way down, but it's still 38,590. My 40,000 might be out of range for a little bit. I still think it's going to get hit this year. Could be wrong. So what? I'm not really betting it that way. The NASDAQ went down hard too. And you can see now we're bullish or bearish on the daily as far as the SAR dots. We're going to get stopped out probably on the weekly as well. They're going to flip. So we're going to be looking for an actual move into next week back up into this zone before we can roll over. And that's the nature of the markets. So they're counterintuitive. This is going to probably hit this, take the stop out, move it up to there. I shouldn't call it yeah, that's what it is. SAR, stop and reverse. It's going to reverse up to here. Next week we can pull back up into this zone and sell off from there. These SAR dots I think are going to really play into our strategy really pretty well. And the 30 period moving average on the NASDAQ here did turn a little bit red today on a daily basis. We've been watching for this for a while, and now it's actually playing out. So great. The transportation index has been holding up. That's a little bit of a sell signal, but still we're bullish on both the daily and the weekly time frame from the SAR dots. Not that that's the end of the world, it just happens to be a thing. USO actually looked like it was going to break lower today and then went higher, and look how it respects the SAR dots. So look, my point is, back here, if we would have been in this position through this chop sideways, and then your SAR dots on the weekly would have flipped, and you were bullish long on the daily, how it worked. They won't always work like this, but that's pretty strong. And we've got one position that followed along with that as COP. Same kind of thing. I wish I had more options in this at this point, and next time I will. So all right, that's oil, gold, GLD. It's far away from this stop right now, and the closer you get to an actual stop, these dots will actually start to come together and get tighter. So there's nothing to do with gold right now. TLT sold off, nothing to do with it right now. BITO, I saw a note on Bitcoin today. I actually think it is just rolling over until it gets a chance to become a bull flag and break back out again. Alright, that's enough of all that. We've got a pretty bearish market with potential for basically a pullback into next week before a sell-off after the beginning of next week. Alright, I pulled this up and I've only been watching it when it matters. Today it matters. We're at 52.83. This zone right here still is what it was. It pulled back somewhat in the last couple days. Still expecting it to put in a new green X or new blue X and go higher. The question is, this thing's got a 6% reversal before it actually would put in a new column of O's. And so we've got that much room to move before this thing can go higher. We can see all that and still get to Dow 40,000 within the next couple months without really blowing this up. This has been going on for a while. And I'm not a big proponent of that. I'm just trying to show you what's possible in the face of a day when the Dow was down over 500 points. You can't let whatever that is overshadow your view of what actually is happening in the markets. So let's look at the bullish percent indexes from a point and figure standpoint. So now the industrials have rolled over 4.55%. We're at this level right here and we're in a box. If we blow below this box, then we're in a new point and figure sell signal, and we'll have to start watching support levels on the daily charts. The NYA down 0.78%. The transportation index didn't even move today. The NASDAQ up 0.28%. The S&P 500 rolled over to a new column of O's, minus 3.69%. The S&P 100 down 2.82%. And the NASDAQ 100 hit this level that we were talking about a week ago. So there's still some weird stuff under the hood that should hold up the markets generally. That's not without days like today, where the S&P and the Dow fall. If the S&P and the Dow fell hard, I've seen this in the past, and this is what I want to show in these videos, is when the S&P actually falls hard. Let's look at the Dow today. Really hard. You don't get this bullish kick into the next day. Now, right now it's only up 9. If this thing comes up and reverses this much, that's a lot of relative bullishness under the hood. And we should be watching for support levels like this one to hold. I mean, it's a big deal. So let's look here. Our VIX really did cross up to the upside. We're in for some nastiness because of the VIX, but I don't know that we're going to get much higher than this 18, 19 level without the thing kicking back in again. And if we look here, something I've been showing you guys, we're going to look at 2 days worth. We had that kick back up again, a gap higher, and then a sell-off. So all this stuff is to get everybody on the wrong side of a market. And the next move that looks like the wrong side to me is everybody get bearish. then it'll kick everybody in the teeth and pull up before everybody, and then everybody will start like breathing a sigh of relief and start going long again, and then they'll get kicked in the teeth because all the people that went bearish and went underwater will get out. All the new people will get in, and they'll get kicked in the teeth when we make another move lower, and that's a 1, 2, 3 to the downside move that could literally get exhausted in the next week or two and come back up. I'm not going to say and make our 40,000. I'm going to stop actually preaching about that. You can actually see though that the Dow futures already went to 40,000, and our Dow average itself has only made it to 39,889. I think that's telling. I think it's eventually going to get there because that's how markets work. But we'll see. And we're not trading these indexes anyway. We're just kind of gauging the indexes. We're trading individual stocks and individual exchange traded funds and individual mutual funds. So if you got anything to drop a line, talk about, you can always email us at precisealgorithmtrading@gmail.com, and we can always do some chatter back and forth. I could even include it here on the website. So much for a short video. You guys have a great night, and we'll talk to you next time.